credit call spread tutorial with using Market Chameleon. This is what we're doing today. This is the not put credit spread, this is a call credit spread, and your outlook is a bearish market. This is very important. Your outlook is a bearish market. If you think the market will go down, one strategy is the credit, where you short, meaning you are collecting income, call spread, and the screener for Market Chameleon. We're gonna read all of that. We're gonna show you how to get there, but before we do, let's get started with a disclaimer. And know that this is not a financial advice. I'm not a financial advisor. This is for entertainment and educational purposes only. And my name is Ziv, also known as Finance After 40. So let's get started. Now, if you follow my channel lately, you know that one of my top 3 favorite option income strategy is a put credit spread, where I'm bullish on a stock or an index or whatever, and I'm betting that the stock will go up, will stay the same, or will go down just up to my out of the money put credit spread. Now this, I think it's the opposite. We're gonna read exactly, but the outlook, again, bearish market, where you collect a credit for a short call spread. So let's see here. Bear, short, this is the title. Call spread involves selling call options for an expiration for a particular underlying asset, a particular strike, buying the same number of call options, same expiration, the higher strike. Because you're selling options, higher premium that you're buying, the strategy nets a premium to the investor. So basically, before we go over the filters, from what I know, I'm gonna give you an example without checking at the stocks, which we will do in a minute. And all those stocks we're gonna check in a minute. You see here 1,500 pages. We're gonna filter this to a much more manageable and simple way to look at. We're gonna use Market Chameleon filters right here. But basically, let's say the stock is at $100. You are bearish, you think the stock will go down. You can sell a credit call spread. You can sell the 105 call, collect income on that, okay, and simultaneously sell the 110 call. That's basically what you do. So you sell the 105, and with that income that you collected, you buy the 110 call, both simultaneously in the software, whatever software that you use, Robinhood, Tastywork, doesn't matter, it's all automatically. And the difference between the two is your credit. Now, your assumption that the stock at 100 will either go down to 99, 95, doesn't matter, as long as it's down, you win. It stays $100, you also win. So that's another something to consider. And if it goes up, even all the way up to 104.999, whatever, you still collect the 100% of your income. Your max loss is if the stock goes from 100 to 110 and it breaks your call spread. Basically, that's where your max loss is. So in order to even get to this screener, before we go over the filters, you're gonna click on screeners, okay, right here. And remember, check my videos. I have we did a couple of videos, tutorials on this one, put credit spread. This is what I like. We did a couple of debit call spread as well. And now we are in this tab, call spread, bear call spread credit, bear call spreads credit, okay, which is basically just a short call spread. It is the opposite of a put credit spread, where you're bullish, now you are bearish. But again, you have 3 ways to win. Stock stays the same. If your call, very important, if your call spread is out of the money, that's the key here. If the call spread is out of the money, you have 3 ways to win. The stock stays the same, the stock goes down, or the stock goes up to your short call that you sold. So let's see the filters. I like, instead of just going over, as I said, go over 1,500 pages, way too much. I'm gonna go here, Market Chameleon preset, and we're gonna see what we see. So we got ourselves Best by upside cushion plus 10%. We're gonna go over this. Recently view, I don't know, because just stocks that I view, it's subjective to whatever that you view. Market laggers, this is interesting. So market laggers plus an edge. Market laggers at all, so market laggers plus edge is probably better, just to see what we see. Best by return if the stock is flat and 10% edge. Best by win rate and 10% edge. This is good also. Best by theoretical edge and 70% win rate at least. Stock in a downtrend and theoretical edge. So many options for you to explore. Bearish crossover plus theoretical edge and bear call spread non-earnings. This is interesting. I'm gonna do this as well. But for now, let's start with the first one. Best by upside cushion and 10% edge. What is the edge? Just FYI. This is where Market Chameleon shine. Of course, 7 days trial. Link below if you are not a member just yet. But best by upside cushion plus 10% edge means that you are collecting more income based on history. So for example, you collect $100 income, okay, but based on history you should have collected, I don't know, $90, something like that. So we're gonna click here on the first one, best by upside cushion plus 10% edge. The upside cushion means that the stock can go a lot higher and you still make money from selling the call spread. So I clicked on best by upside cushion plus 10% edge. We got expiration, we got the filters here. Next 30 days, max $500, $5 credit, ex-dividend after the expiration. Theoretical edge, we have over 10%, win rate over 70%, show result by best by upside cushion. That's very interesting. Show result by best by upside cushion by symbol. You got other stuff in here. This is the more you explore Market Chameleon, the more the more options you see that there are available. And now we went from 1,500 pages to 4 pages, and that's much better. Now for me, I like to look at market cap, so and it's also filtered by market cap. So the first option is Amazon. Interesting. Price today $180. Let's round it up, 179.86. Let's see what we found. Market cap 1.8 trillion. And look at this. This is what it tells us. It tells us that the trade itself, before I go over the specific, gives you over 10% edge. And that's what I said. The more edge, the more income you collect based on history. 10.6% edge. 86.5% win rate. Okay, now remember the trade Amazon at 180, and let's say you are bearish. Okay, you are bearish. Expiration for September 20. There's no earnings, there's no conference, there's nothing. It just depends on the market and what they do. And the trade itself is basically tells you to sell the 185 call, okay, and buy the 190 call. This is it. This is what you now remember. We're not even at 180. We're not at 180, and it tells you sell the 185, buy the 190, and collect $100, $102 compared to $60. You see here, theoretical value. This is what you should have collected based on history. Collect $100 compared to 60. This is very nice. Your max loss is 400. Okay. 398. Upside cushion, you still have Amazon 3.4% to go up just for you to break even. If the Amazon goes up 3.4%, I assume I can calculate it, but then the price will be 105 plus 102, which is 186.02. This is your break even. And if the stock doesn't go anywhere, just stays at 180 for the next 10 days, basically, that's it, then you are getting 25% yield on your money, 25.6% yield of your money. This ain't bad. I might consider this to my account in like 10 minutes after this video. But this is the beauty of Market Chameleon. It found you a stock that, based on history, you should have just collected $60 credit. You're collecting, I don't know, almost double. Double is 120. You collect 102, like 80% more. It's very, very nice. Now let's see other stuff. SPY. Let's see what we got for the SPY. Oh, it opened this. Let's go back. SPY 546. Okay. Let's see what's the trade. 83% win rate, 11% edge. And it tells you, look at this, for September 19, 9 days from now. Now remember, there's the inflation numbers more, the Fed, interest rate. There's a lot of stuff that can happen in the next 10 days. So the SPY, the QQQ, that's why there's a lot of volatility. But just in general, just an FYI, price 546. And it tells you to sell the 558. This is for small accounts. You sell the 558 calls and you buy the 560 calls. So your max loss is if the SPY, which is now 546, goes above 560 by expiration 10 days from now. And then, only then you will lose $150. But if it doesn't, if it stays below 558, you collect 50. So it's a 3-to-1. You risk 150 to make 50. You can do 10 of those. It's up to you. Not a financial advice. Upside cushion 2.2%. So SPY can go up 2.2% in the next 10 days, and you still collect the entire amount of income. And of course, if the SPY doesn't go anywhere, you made 32.5% return on your money in 9 days, which is absolutely insane. So this is something to consider. Now let's see, just for the example, I want to see upside cushion. But I also want to see like a high stock market cap. Upside cushion means the stock has to go a lot higher for you to lose. Of course, your income will be below as well. So I've done this. You see, 28% and But I want something that I know. So here's for the example. I'm doing this live with you. We got Intel 1880 right here. Okay. And it tells you for October 4th, which is I don't know, 3 weeks from now, something like that. You sell the 21 and you buy the 22. Now we are at below 19. You sell the 21, you buy the 22. Now Intel went down a lot, so they could bounce. I don't know. I want to find something. It's up to you. Let's see Alibaba. I heard they have some news yesterday. The people from China can buy the stock or something. I don't know. I haven't paid attention to Alibaba. Price 83. Almost 200 billion market cap. Look at this, 99% win rate. This is insane. 10.5% edge, meaning you collect $19 instead of zero. This is basically, this spread should be worth zero, but in reality, because of volatility and whatever, you collect $19, which is insane. The trade itself, also for October 4th, you sell the 90 calls, you buy the 92 calls. So that is, and as long as Alibaba is below 90, now it's 83 now, you collect the entire income, which is $19 compared to zero. Your max loss is 180. You have 8.4% cushion to the upside. So Alibaba can go up 8.4% and you still break even. If the stock doesn't go anywhere, you just made another 10% yield on your money. Feel free to play around with all of those. The next videos, we're probably gonna go over other stuff in here. I like to do the market leggers plus edge, but this is something, another tool in your toolbox, as they say. Save the strategy into your, like download the strategy into your head, or put it on a notepad or something. When you have a bearish outlook, you can still collect income by doing the credit call spread and use Market Chameleon to find your edge. 7 days trial, link below. I will see you next time.